Greetings traders. In today's video I will show you one trading approach which is used by professionals and more often than not completely ignored by amateurs, and this is multiple time frame analysis. It's extremely important to understand how markets move and whether their long-term trends and short-term noise is aligned, especially if you want to trade on this market. So now you will see what are the pros, cons and actual practical application to this. So let's roll off. So, in one question, what is multiple time frame analysis? Actually, this approach is really simple to understand, because here we simply, as the word implies, use multiple time frames to determine our market direction and thus trends. Typically, we start from the shortest time frame when we are actually making our trade decisions, which could be something like 15 or 30-minute chart. Then we will go slightly higher to see what are intermediate time frame moves or time frames which are for market swings, and then we are going to larger time frames where we see what are the general market trends. It's important to understand that, because in my formal days when I just started to trade, I neglected this approach and was wiped out several times. I wouldn't say wiped out, no, but I was making costly mistakes which cost me way more than I wanted, because I simply had so much false breakouts and useless trades that I didn't understand what the hell is wrong with me. But actually, in retrospect, I simply used one short-term time frame and I neglected to see that my short-term trade was completely opposite to medium and longer-term trends. So in other words, if something is falling in hourly or daily chart, it's not wise idea to go on 15-minute chart and to trade against that direction. But this was a mistake I only learned later on. But now I will show you my experience and my conclusions for this mistake, so you have to avoid this mistake for your own trading. And that's why it matters. It matters simply because, as I just told you, you simply cannot go and trade strictly against longer and medium-term moves, because simply it really rarely happens when you have good trades like that. I will show you a practical example later, but now you simply have to understand this idea that market moves has to be aligned. So if prices are going downwards on the medium and long-term moves, then you might have good profit opportunity if shorter time frame moves are at similar direction, never to oppose. There might be exceptions when markets have exhausted themselves and short-term fall or short-term rise is strong, and in medium and in longer term the trends have exhausted themselves and started to move flat. That might be exception, but never go sharply against longer-term move. So what's the question of correct time frames? Well, correct time frames probably will depend on your way how to trade, but here's the rule of thumb. You have to have 2 or 3 time frames. One is where you actually trade, other is where you have medium-term trends, and third is where you have long-term trends. So in practice that might be something like that. If you are trading at 15 or 30-minute charts, then you will use them as your obvious entry and exit points. Then you could go to 4-hour chart time frame, where you could see support and resistance signs and medium-term trends, or simply what happens in last 5 days, not last 5 hours. And then you could go to daily charts and to see what happens in last couple of months. And you have to see whether they align with themselves. And now let's go to practical example and see how this looks in real life. Now we have euro against dollar currency pair. Now we have daily time frame and we see markets moved from June upwards roughly 0.7 cents and went up to 0.12 cents. But now they went sharply lower since 29th of September. So they went from $1.12 to $1.10. So clear short-term downwards move. Let's see how strong this move is in last couple of days. Yes, it's simply showing the same pattern. Then from 30th September, it's going sharply lower as a rock. So both in daily and in 4-hour charts, we have identical pattern. Prices are getting lower, momentum is down, and prices are below moving average. And what will show us our shorter term time frame where we actually trade? Here we are slightly exhausting this previous move, but we still see that overall situation is bearish. So we are actually not that sharply lower as we were with 4-hour time frames, but we are not very bullish either, because as we see, prices are either falling or flat with very small trend reversals. So I wouldn't say this is anything close to bullish signal. So here's what my point is now. If you trade moving averages, this might seem tempting to think that yes, this might be a good place to go higher. But if you are trading for higher than like couple of minutes, no. In this case, case, you simply ignore this market or don't trade it at all up until you have bearish signal. So here, idea will be avoid any kind of bullish signal because all longer and midterm charts are say clear downturn trend, and now we are flat at best. So here, ignore it. Or another time when prices will be depressed again, it could be a very good opportunity to start and go short again. For instance, if you wanted to trade at 30th of September and didn't manage to do that, then you can simply see for a shorter time frame to see whether you have abilities to enter this market with better prices now. So here's the approach. 2 bearish signals from long and medium term charts signaling downwards. Now we are flat at the shorter time frame. So now we are either waiting or doing nothing. If we wanted to go bullish, never go bullish here unless you are trading more for a couple of seconds and then wait for bearish signal to enter the market. This is practical approach with multiple time frames. So if you want to see how this is done more professionally with additional markets, not only with one trade example, if you want to see multiple charts and multiple time frames in action across the board, so to speak, and if you want to see analytical trading information, free trading signals, and much more live trade analysis, you have to join my Telegram channel because that's the best way where professionals will be showing novice traders how to trade correctly. Join my Telegram channel, but now let's continue our video. Before I end, I have a couple of things that I want to address. First is risk management tools and how it helps with multiple time frame analysis. Firstly, of course, it avoids false breakouts because if your trades are aligned, there is way higher probability that your initial trade setups will be correct because you are aligning middle term, long term, and short term market moves in your trades. Secondly, of course, if you have higher probability, then the strong market moves will continue. Your risk-reward ratio per each trade should be better as well. So this is the second thing. And third thing is, if you have slightly different approach, you could use this not only as an entry tool, but as a stop loss tool as well, because you could see at either longer or shorter time frames that there might be some market resistances and support lines, and you could use them as a stop loss places. So this also helps. This wouldn't be a game changer, but it still gives you additional layer if you want to have it. So this is risk management tools that could be incorporated with your multiple time frame analysis. So, and now let's briefly view at common mistakes that we have to avoid. Firstly, do not overcomplicate this. Do not use 20 timeframes because at one point there will be opposing one against each other and you will be really conflicted. Use 2 or maximum 3 timeframes to see whether they align. Of course, if you are trading with monthly charts, there is no use for 5-minute charts, and if you are trading for 5 or 10 seconds, you don't have to look at multiple timeframes, but for 80% of the time you have to, and you simply have to look whether 2 or 3 timeframes are aligned. If they are, trade. If they are not, wait. That goes to my next mistake, and this is lack of patience, because simply we want to trade because we have hot idea, but impatience has always been costing money to every trader across the world. So wait for your opportunity, do nothing, or wait for that perfect trade. Otherwise, you will be just ruining your account with useless trades. Believe me, I have done this myself. And third is ignoring the higher time frame or general market ideas. Yes, I told you before, if you trade 5 seconds, you could avoid that, but in general, you have to understand how market moves. You have to see that fundamental analysis, long-term trend, and to understand what are your moves there. So let's wrap all this up. What is multiple time frame analysis trading? Well, actually, this is really simple yet extremely effective approach. Here you are not seeing simply one chart and thinking this is all the information there is, but you are seeing this from multiple layers. So you're seeing your shorter time frame where you execute your trade, then you have middle time frame where you see daily market swings, and then you have longer term structural trends with daily or weekly charts. So this is the way you could see what's really happening into markets, because if you are going long or short in shorter time frames, you might have dangerous idea to bet against long-term trend. Do not ever do it. See full idea, full understanding of market, and only trade when your market time frames are aligned. It's really simple. You don't have to have additional degree in computer science or in physics. You simply have to have good common sense, patience, and ability to pull the trigger at right move. Believe me, just look at the markets from this perspective and you'll see them differently. You probably will save you a lot of time with false moves and a lot of money with the money that was costed by these false moves. So watch this, understand this, and if you want to have additional information, of course, watch all of my videos, like them and subscribe them, and join my Telegram channel. Let's meet later and let's make money together.